Oh, here we go again. Back to work we go. Hope you guys had a fantastic, restful Veterans Day yesterday, but we got some money to make the rest of this week. And boy, do we have a great trading session setting up for Thursday morning. Two clues on the charts right now. Strong move and a trading range. Put those two clues together. It's easy to see right now. Bear traps are probably where the money is made on Thursday. I have two, maybe three different variations of some bear traps I'm going to share with you all in tonight's video. We'll talk where to find the right entries, how to time the entry properly, where to take profit. By the time we're done tonight, you'll have an easy roadmap to make some money on bear traps as well tomorrow morning. So enough of the intro. As always, thanks for tuning in, watching our videos. I missed you guys yesterday, but we are back in business. Once again, the show must go on this week. S&P SPY ready to go tonight. NASDAQ triple Qs are always ready. I've got 4 clues on these charts telling me where I think the money is made tomorrow. First clue, it's here on the hourly time frame. It's pretty easy to see right now. The buyers are in full control here on the S&P SPY. Buyers in control right now. NASDAQ triple Qs. I like to use the 60-minute time frame as an overall directional filter. It's pretty easy to see right now the buyers are in full control of momentum. Couple things though here. Look at that low on the hourly time frame. I got 68.33 on the S&P. A pair of those lows on the NASDAQ, 25.478, 25.452. Keep those numbers in the back of your mind because we're going to talk about those and why they're important a bit later on tonight's video. But one very important clue for tomorrow, though, is we are definitely bullish here overall. Diving into the calendar for tomorrow, we don't have any major news because, well, they're trying to get the government reopened right now. It sounds like tonight there might be a late night vote, and we may have the government shutdown end at some point tonight. Unfortunately, though, we're probably not going to get that CPI report and that jobless claims tomorrow. However, though, rumor has it, though, if we can get the government opened up tomorrow, we might get some big data points on Friday. I'm hearing non-farm payrolls. Apparently, non-farm payrolls is all ready to go. It's going to get the government reopened on Thursday, and hopefully we might have a non-farm Friday, always my favorite days of the week. So if you like making money, definitely make sure you tune in tomorrow night because we'll talk about potentially a non-farm Friday, one of our biggest trading days of the week here. So back to our charts though. Let's now dive into some tick charts. Tick charts are best for entries. This is a 7,000 tick chart. All the time frames you can see there, upper left-hand corner. And in case you're tuning in for the first time right now, welcome to the channel. That is the 21 EMA. It is the only indicator we need to make repeatable profits each day. There are 3 more important clues here on this tick chart. One very important clue, a strong run higher. Anytime we have a strong run higher in an overall bullish market, all of that momentum now is trying to go back and retest that high, right? So there's a big bullseye right now on that 6,900 half level, that high we saw kind of overnight. The next clue we see here, very big clue, is this range right in the middle, right? That range right there. Now, why is it important? Because ranges, what do? They like to rotate, right? They go up, down, up, down, up, down. Symmetry, right? Symmetry, the amount above, the amount below, a lot of support down there around 45 half. And because we know we're overall bullish, we know that bullish ranges are more likely now to break out and go higher. So a very important clue, range rotation, pendulum swings off the high, right? Pendulum swings and breakouts going higher here. The final clue, one of my favorite clues on this chart right now, are the previous ranges. Previous ranges, though, in case you're new here for the first time right now, previous ranges. You always want to keep those marked on your chart. That 45 level, very attractive. But what do you see down there? 68.22. Now, what was that number earlier? What was that key number we said earlier? It was that 68.30 level. So I'll tell you right now, if the trading gods are watching down on us tomorrow, it will give us a nice big run going lower and maybe some bear traps down there off that breakout pullback zone below that 68.30 level. Now bear traps, we'll talk about this because there are 3 different types of bear traps I'm looking for down there. Bear traps come in lots of kind of shapes and sizes. So we'll talk about that a bit later on here. And I do want to, obviously too, I do want to talk about that breakout going higher. There are 3 ways to buy it, and there's 1 way to sell it off the high up there. So we're going to cover that a bit later on in tonight's video. So boy, I'll tell you, if you like making money, I would definitely make sure you watch all the way to the end here right now. One of my favorite bear traps for tomorrow would be, let's complete that pendulum swing down around 45, right? Let's get down to that trading range down there. They're starting the process right now, as you can see here. I would love to get a nice strong run going lower, get outside the edges of this range. Whenever you see a range like this, the money is made around the edges, right? Ranges like to rotate like this, right? So the money really is made around the edges above the highs, all right, below the lows, and that rotation back and forth there. So let's get below the edge. And I always say in our trade room, let's make this a really strong breakout, because what's going to happen is a really strong breakout will confuse a lot of inexperienced traders, and that they're going to think that's a legit breakout, right? But most breakouts fail because ranges like to rotate. So as I start seeing rookies begin to commit down here, I'm going to look for a classic, I call it a classic 2-try bear trap. Bears once, bears twice. I like to use 2 tries because I want their stops. Because if you're caught short and you get stopped out, what happens? You buy your way out. These produce some really nice strong rips back into that range going higher here. Now remember though, if we can get that bear trap squeezing higher here, we then look to add to our position, and we do that with this pattern. It's a shallow pullback, needs to separate off that moving average, then a higher high in price, and the add-on is right below that low. In our trade room, you'll hear me say a bear trap into an add-on, and we know that big high up there. We know it wants to take out that high. We know that ranges like to rotate with symmetry, so those will be our exits on the way higher. Now, you'll notice down bottom here, I have a measured move down here. If there's one thing I hope you take away from this video, one would definitely be the edges, right? Because you'll make a lot more money trading the edges and ranges. The other would be though, oftentimes we see a strong run down. We don't get a 2-try bear trap right there, right? What happens is strong run down, it pulls back, and it completes a measured move. Okay, these measured moves, they can be a little bit scary because they feel very bearish. But remember, the hourly time frame is bullish. We use that for our direction. Don't let the tick chart fool you into thinking this is a big major reversal. It's not. So the most important thing though is look for that measured move, the breakout leg, measuring leg. And I'll tell you, these are oftentimes our biggest winners in our trade room because it fools everybody. Feels so bearish, but again, breakout pullback zone down there. And same thing here, right? Bears once, bears twice, trap those bears in. And again, in range markets, they're going to rotate aggressively. So when you see that separation like that, take half off, put that half right back on again, and put it right back on again on that add-on, right? So think about that larger pullback, 1 leg, 2 leg, measured move, bear trap, add-on, and leave that runner, take that paycheck around that high. Now, I want to talk about if we go higher here, because again, this could really snap going higher here. Before I do that though, let's slow down for 2 seconds, because I know if you're watching right now already, you guys know this stuff. You're making money on these patterns already. But if you're watching for the first time right now, this could be a brand new language I'm speaking, a brand new strategy, right? Don't you worry. I teach this entire roadmap in my free trading course. In fact, I have a ton of examples of all these bear traps, all the add-ons, all the measured moves. Guys, bottom line, the markets are way too good right now not to be making consistent profits. So what I'll do is I'll drop a link up top here, upper right-hand corner, hit that link that popped up there, take that free trading course, because the strategy I teach in that video course will teach you a simple trick we use in our members trade room each morning that literally tells us exactly where to find the winning trades. It is stupidly simple. More importantly though, let's face it, we make our money by timing good entries, don't we? So in that video course, you're going to learn my 4 favorite entry setups so you can time better entries, get your confidence back, get your P&L back in the green again. Guys, if you're still missing the biggest moves each day, if you've lost your confidence in your current strategy, what are you waiting for right now? Hit that link that popped up there. Watch that free trading course. Everyone loves all the trade examples I include in that short video series. The best part is it's completely free for you. Keep in mind too, folks, I'm going to put all the important links you guys need down below tonight's video. Start first with that free video class. Most folks start making money all on their own, all from that free video series. So definitely start there first. And don't forget too, I post a ton of charts and videos and mindset stuff on my X feed, my Twitter feed, in between these YouTube videos. If you're on Twitter X, give me a follow. Again, all the details you'll need are below tonight's video. And also, too, don't forget, we trade together every day, 8 o'clock Eastern time. I'll put trade room links down there. Come join us. Come trade with us. Again, all the details you'll need to learn more, hopefully earn a lot more, are linked below tonight's video in the description of this YouTube video. All right, where do we leave off here? Yes, I want to talk about going higher here, right? But let's cover 2 more things I want you to be aware of. You know, for example, this morning we had that strong run going lower. We saw the bears try once, try twice, right? That 2 try right there. Okay. Now look what happened between there. Look what happened before that happened. It retested. It ran lower and it retested. On a retest, 1, 2, it's a better entry on a retest. So one thing I want you guys to remember is retest trades like these, okay? They go like this. They're gonna run lower, and oftentimes we do get a bear once, bear twice. Oftentimes we do get a bear trap down here, and then it makes that retest. So whether or not we get the bear trap and then the retest, well, this morning, right? This morning didn't happen that way, right? It ran up. We had to wait for the 2 tries, but during that second try, it retested and back up from there, right? So what I want you to remember though is that when this thing goes back and retests that low now, again, this will feel very bearish. It'll feel like reversal, but think about what's really going on in this situation. Anybody who sells up here, where's their profit target? I can almost guarantee you most of the profit comes off, because we're bullish overall, at the low. So sellers up here become buyers down here. Now, you tell me, right? Bullish market overall, at key support now, breakout pullback zone underneath. Is this a good place to sell? Of course not, right? It's the last place you want to sell. Range above us, bullish overall. So in that case, that seems like it's a good place for what? For a bear trap. Exactly right. Now, we call these retest trades in our trade room. And I swear right now, these will become one of your favorite trades, because they feel very bearish and they trap everybody in. Bears once, bears twice. I just want you to know that if it pops up and retests like this is even better. It's even better, right, than the initial move going lower here. So I tend to get a bit more aggressive between you, me, and YouTube. I tend to get more aggressive on that entry right there on the retest trade. Just because now that strong run, it retests that low, bears up here, become bulls down here, right? Like I said earlier here in this video. So bear trap, add on more and let that sucker run. And the final variation of this, and then we'll talk about going higher here, because we may end up just creaming higher here. The NASDAQ has a beautiful setup right now. Don't forget too, if we run lower and we don't get that bear trap down there, right? What happens oftentimes is it runs lower, it pops up really quick like that, and then we get 2 tries like this. Remember, the goal is to buy low, right? I don't want to buy high, okay? This could be tough at first because, well, when I was a newer trader, I was like a deer in headlights, right? I was so focused on finding the entry pattern, I would lose the sight of, it was the forest instead of the tree. You know what I mean, right? You know that metaphor? So the problem with this is if we pop up really strong like this, all right, I don't want to buy as we're going higher, The way you remedy this situation is you buy underneath a prior swing. So this is where you gotta be careful here, because runs lower, bears once, bears twice. Okay, I'm taking a small amount of risk for a large amount of reward. That's a good trade right there, right? However, if it pops up hard, right? Sometimes it goes like one try and then two tries way up here. Yeah, no, right? That's the one you want to avoid. What I do on that situation though is small adjustment. I want to look for that low and buy below that low. We call these V bottom trades in our trade room, right? It can have V bottoms up off that low. Now, if we're really lucky, there'll be a trend line off that high like that, down around that low, that channel. I mean, come on. There's not much guaranteed in anything in trading, right? But this is as close to a guaranteed winner as you're ever going to get, right? Bears are trapped in, momentum's turned, we're trying to rotate higher, and we're buying nice and low off the low of that channel. I mean, just give me the money, right? It's a bag of cash. Just walk over and just pick it up and run higher, right? So keep an eye. I'll tell you that might become one of your favorite trades as well. So lots of great bear traps if we go lower there, and hopefully you guys can see some variations there in case we don't get the perfect bear trap for tomorrow. Now let's go a bit higher here now. Now let's dial this up a couple notches. I want to show you something, the NASDAQ. The NASDAQ is a really cool chart right now. Now, first things first, we can see right away here, NASDAQ is bullish overall right now on the hourly time frame. If you were here earlier on in the week this week, that felt like a V bottom or a blow off bottom. We talked about that, late last week, early this week here. So feels like those bears got their bottom on Friday afternoon here. We're bullish right now into a trading range. Now, hold on. Remind me again, what do ranges like to do? They like to rotate, right? What was the word earlier? It was the edges, right? It was the edges, right? See, that's the key, right? The edges. So look up here. Of course, above the edge, they sold. Okay, where's the, yeah, it's right there, right? That 478, that 452 level. So, okay, so that's where the edge is on this range. There's multiple edges, right? The 478, the 452 level here. And if we go a bit lower there, do you see the breakout pullback right there? I see you. What is that? 391.5 out there? Okay, so we have plenty of areas to look for here down below us. Now, down to our tick charts here right now. And by the way, guys, if you're enjoying tonight's video, please help me grow this channel, will ya? By hitting that like button for me tonight. Make sure you subscribe, share this video with your trading buddies. I'm gonna learn stuff as well. Thank you guys so much, as always, for tuning in and watching my videos. So thank you for the likes, the subs, all the ongoing support, all the comments, all the love I get in the comment section. Now, I promise I'm done begging for likes here. Let's dive in and talk tick charts here right now. What do you see on this chart right now? A little bit different, right? Because what do you see? Strong run up. Yeah, absolutely. That's strong. It's a bullseye. So what I call this is unfinished business, right? That's what it is, right? It's unfinished business. If we make a strong run higher, anytime we see a strong run higher, expect a pullback and a retest. Now, strong runs like to retest. But hold on, though. Hold on. Look at that channel right here. Now, we're starting to break down below it. You can see they're trying to break below it. But that channel, where's that channel want to go? Channels like to rotate. All right, so we know where that channel is up overhead there. And what we're seeing there, look at the range right here. Look at that range. Final clue. Now, I know what you're thinking right now. If you're a student of mine or if you watch my videos, what does a bear range do? Yeah, slingshot, right? Slingshot reversals. I almost talked about this in the intro this evening, but I want to wait until the end of this video for you on this one. Slingshot reversal. What is a slingshot reversal? Well, it's kind of like what it sounds. We have a strong run up in a bear range. Okay, now we know strong runs, they want to retest. What is a bear range going to do? It wants to rotate, right? Down, up, down, and remember, it's a bullish market overall. So as we rotate back up again, this is where slingshots happen. This is where bear traps live down below that trading range. And because we're bullish overall, as we rotate, when those bears get trapped in down there and their stops get squeezed, it snaps, right? It slingshots off of that low. If you're watching for the first time right now tonight, anytime we have in a bull market overall, a strong move up into a bearish range, okay? That's the recipe for it, right? It's a strong run up in a bearish range. We run lower, we bear trap down here, and we whoop, and we slingshot, right? We slingshot. What happens in these situations is that the pendulum swing doesn't stand a chance, right? Because all of that momentum as it rotates, and we know the buyers really want to get back to that high, right? So we take a little bit off there at the pendulum swing. But these slingshots, I'll tell you, these give me goosebumps just thinking about these because they have oftentimes been our biggest winners in our trade room. So I gave a little bit of that away already, didn't I? That bear range right there, my favorite trade now. Don't forget these levels, right? See that level right there? 478.5, 452. I see you 391.5. Any of these areas look really great for a slingshot. It's a bear trap. That's all it is, right? It's a bear trap. We're running lower. We're bear trapping down here. We're squeezing back up. And if there's one scenario where you need to leave a runner, it's going to be this one. We run higher here, and I'm looking for that run up, that separation. All the same tactics we mentioned earlier on the S&P, right? The bear trap, the add-on, that is a great way to trade this. Don't forget about that measured move down here. Do not let a strong run down. Do not forget that measured move technique. This, I'll tell you right now, once you learn the measured move technique, everything gets so easy. Well, no, I shouldn't say so easy, but everything gets easier, right? For example, back here, for example, right? What does it look like to you? A breakout? What do breakouts do? They like to make measured moves. Pretty simple, right? Very simple. Find a range, find a breakout. Now, if I can get a measured move going higher, that's a target. That's a target, right? It's a bull market. A measured move going lower, that's an entry down there, right? Learn that technique. Measured move after a breakout. Everything begins to get easier once you learn that technique. It's for me, it definitely helps. Okay, so running lower here. Now again, retest trade. Okay, retest trade, measured move trade, V bottom, bouncing off that low. All the same stuff we mentioned earlier on the S&P definitely applies to the NASDAQ. But what if we don't get it, right? What if we don't get it? What if this thing starts rolling higher here? We know the buyers want to take out that high up there. So if we start going higher here, there's this one kind of sequence that I want you to remember here. And this applies to pretty much every range that breaks out higher. When I have a range like this, I want to think about this sequence, okay? Very important. This sequence happens over and over and over again in a range breakout. First things first is we start running higher. And as we run higher, we separate off the moving average. Again, separation is one of the most important things because separation says strength. Separation says strength off the 21 EMA. This is the reason why I don't use any other moving averages. I don't want to confuse this, right? Separation, strength. Once you learn that technique, you know when to get aggressive. Okay, so getting aggressive, I'm taking nibbles on this one, okay? Half size position, quarter size position. This is not the spot to be going full size. Do whatever you want to do on this, but my game plan is always nibbles, right? Nibbles, half size, quarter size, right? 1 or 2 contracts. If you hit it, it'll go nice for you. Complete that measured move up around that high. Okay, that's the first trade. Now, once we break out of a range here, breakout pullback. Anytime we break out of a trading range, it's just a matter of time before we get a breakout pullback. It is not an if we will, it's a when we will, okay? When markets pull back, they must always pull back in a 2-legged pullback. Think measured move, 1 leg, 2 leg, then look left, okay? Look left. Find some of these prior swings. These will usually be where that key support level is, right? So find those prior swings. That's my breakout pullback zone. And as always, we're not going to blindly buy it. We wait for the proper signal. I like using traps. Lots of ways, time entries. I like traps because when bears are trapped, what happens? When bears are trapped, they get stopped out. Their sell stops become buy orders, and we squeeze those stops where? Back to retest that high. Okay? This is a sequence that happens over and over and over and over again repeatedly. Again, nibbles on the way higher, two-legged pullback, a bear trap, an add-on, and we're back up to cash that paycheck, back up to retest that high. Another variation of this, which does happen quite often, not as often as that one is, we oftentimes will run lower, we'll bear trap, and squeeze and begin to grind. And float and float and float and run higher, right? What'll happen is we'll run low, we'll bear trap down here, we'll pop up, and we begin to, you guessed it, separate off that moving average. Now, I want to buy underneath that low, but in these situations, I don't get a chance to do it. Now, one more thing I want you to write down tonight. Grinding markets are tough to stop. Grinding markets are tough to stop. When it separates away from that moving average and grinds like this, right? Tough to stop. I can be a lot more aggressive when it separates. Aggressive when it grinds. To do that now, trend line. Off the highs. Now, beware. That voice in your head, which is almost always wrong, is going to say, jump into this. Okay, I always say in this example, the FOMO is real, right? The FOMO is real in this one. This one's tough to sit on hands and wait for it, but in my experience, your patience will pay well. Find that new channel. Here's a trick though. Here's a trick. Mark those lows, find some lows, and get in right below those lows. Now, I would love to go into more detail tonight on these specific entry tactics we use in our trade room to time these entries, but I'm out of time right now on this YouTube video. So that free video course, I said earlier, if you haven't done so yet, pause the video, take that free video class because you'll learn the bear traps, the pullback combos, the add-ons, the strength trades, right? All that will make a lot more sense once you guys dive into that free video course I mentioned earlier. Love that one. The only final variation now is we pop up and go into a new trading range up here. Okay, do not be surprised if that happens here. We oftentimes see stuff like this where it'll run lower, it'll bear trap down here, it'll pop up, but it's not going to grind. It doesn't break out pullback for us. It just kind of and just goes to sleep on us, right? It starts going sideways on us, right? Could happen tomorrow because we got maybe non-farm payrolls on Friday. If that happens, now we have two ranges. Okay, now you know this already. Put this all together, right? Now, this previous range wants to what? It wants to break out pullback. Okay, the new range, what does the new range want to do? The new range you got it. It wants to rotate, right? It wants to rotate. These, I'll tell you, if there is a heaven for day traders, it's nothing but this stuff. All right, I kid around obviously these videos, right? But this is primo. Okay, this is as easy as it gets right there, right? Because now you know the previous range, breakout pullback, the new range, rotation, right? Rotation, right? Love. I'll tell you, would love that trade for us tomorrow as well. Bear trap, add on, take that profit target at the side of that range rotation, right, guys? That's my game plan for tomorrow. What do you think though right now? What do you think? Let me know your game plan in the comment section down below. While you're down there, hit that like button. Make sure you subscribe. Give me some feedback while you're down there. I always want to make these videos better for you guys every evening on these videos. Wrapping things up for tonight though, don't forget though, tomorrow, the place to be in the trade room, 8 o'clock Eastern time. I'll put all the important links you need to get started in the description of the video tonight. Start first on that free video course. Enjoy the trade examples I include on the website there. Then come join me in the trade room and we'll do it together. Right, guys? In the meantime, be well out there. Be nice to each other, will you? And you better be here tomorrow. Adios, amigos. Bye for now.